MGX Minerals is revolutionizing the new energy economy with patented lithium extraction technology, replacing traditional solar evaporation using low-cost, low-energy nanofiltration. The first system of this paradigm shift technology is currently being commissioned. MGX Minerals trades on the CSE, symbol XMG, the OTCQB, symbol MGXMF, and Frankfurt, symbol 1MG. For more information, visit our website, mgxminerals.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. Welcome back to the show, Bob.
Yeah, Jim, it's always look forward to Friday. It's the end of the week. Plus, it's a chance to talk with you and also talk to our listeners.
Bob, what were you looking for going into March? And now that we're in March, what's going to happen to the stock markets?
Yeah, that's what I wrote yesterday. A little checklist for a top. And the first question is it up when it should be? Yep. We had last year an outstanding market for us because in the summer we were looking for the lovely sunshine to change to twilight, and then with the possibility of a twilight zone liquidity problem being discovered in the fall. Now, if that showed up, and it did, it could clear as late as Christmas, which it did. December 24th was really the bad day for stocks and for crude oil, both of which became very oversold. So then our view was that going from oversold, we would look for a rally out to around March. And this would also be supported by a rebound in crude oil prices and base metals, that sort of stuff. Lumber, that one rallied. And also improving trend in the credit markets with the yield curve being friendly and the credit spreads being friendly as well. Well, all of this has worked out. So there are, in answer to the first question, is it up when it should be? Oh, yeah, it is. The other question is, are there signs of speculation? And yes, our technical indicators are showing sentiment, momentum, pattern, big evaluation. So it's, yes, there are signs. And then earlier today, there was a pretty good rush. There was some good news out of China and this, that, the other thing. It's not so much the news that matters. It's what's happening. So on a market that is becoming overbought, another day of up is about the right thing. So on our technical indicators, it could be a number of weeks before you actually roll over on these things. What they do is measure the intensity of speculation, which it is high, and then you just wait for the rollover. So, again, Jim, as I said, it could take a few weeks to see this, and we'll be watching for key points, bank stocks or the broker-dealer stocks, that sort of thing. So there's all kinds of backup that we have in order for one to be appropriately positioned. I mean, you just don't want to, in this kind of a market, you don't want to be overly long when the market has shown a speculative thrust, which it has done now. So it's time to take a little money off the table and wait for the next opportunity on the long side.
Well, you said banks could be an indicator. The CEO of the TD Bank warns profits will be at the low end of target this year.
Whoa, yeah. Yeah, the financials, like the bank stocks, at important highs have a tendency to lead. And last year, of course, what we called our indicators, we called them the friends of the bull market. and they were likely to be friendly right out till mid-year, and they were, and then they were likely to turn unfriendly, which they did. So then now with virtually the same items, as I said, base metals and crude and the credit markets, that's then our friends of the rally. We can't say friends of the bull market because there's some probability that the blow-off in 2018 really was the conclusion of not just a long bull market, but also the conclusion of a fabulous bubble. And this one was fabulous, and it compares to 1929, when the pattern was that in the teens, everybody was worked out about inflation. It was awful, everything. And indeed it was. In 1920, the U.S. CPI inflation got up to, I think, 20%. And then that blew out in 1920. And then the action shifted from speculation in commodities, then to shifted to speculation in paper, like stocks and bonds. And then it went right up till 1929, and that was 9 years after the peak of global speculation in commodities. And this is what we have this time around. 2008 was a huge speculative year for commodities. Remember, crude oil up to $147. And then if you take the commodity index by the month, which we have, of course, and then to the month of the high for the stock market, it was 9 years and 7 months. And that's using the high for the New York Stock Exchange Composite, which peaked in January 2018, and along with the world index of stocks without the U.S. in it, that also peaked in January 18. So that was 9 years, 7 months. So if you step back to the previous big bubble that concluded in 1929, and also a commodity index is available through the 1920s. So that spread from the high in commodities to the high in stocks was 9 years and 5 months, which is very intriguing. So there's suggestions that, of course, that was the greatest bubble in history. And the suggestion is that it ended on an almost perfect timing. And then now it's unwinding, and we are in a post-bubble contraction. So this is where this rally then becomes important, because we're getting overbought signs at a much lower level for the New York Stock Exchange comp than was reached in 2018. So then you will look for a correction from this level, and at some point within this year, if the big broad market, as I said, the New York Stock Exchange comp, takes out the December low, by definition, you've got a bear market. So, but that we should be patient on, but we should also take advantage of the opportunities that are presented from going from oversold at Christmas time to overbought now. Gee, Jim, it sure sounds easy when you're talking about it.
We'll have more with Bob Hoye right after this.
I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features through our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE, symbol CRL, and the Pink, symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're speaking with Bob Hoye. Bob, the SNC-Lavalin controversy happening in Ottawa, is that affecting business in Canada or the attitude towards business in Canada?
Well, I take it, Jim, as a step towards reform. Over the last few generations, governments in supposed democracies with constitutional limits have really tried to become unlimited, very intrusive, and call it in-your-face and in-your-wallet intrusions. And also, they believe that they're acting on behalf of the public's interest, the best of intentions and everything else. But the whole point of a constitution and a rule of law is to limit such ambition. And in this case in Canada, yeah, it was pretty sneaky business. A huge engineering company, SNC-Lavalin, was caught bribing governments to do business in other countries, and there's a rule against that. But the Liberal government attempted to kind of reduce the penalties and tacked on into an omnibus bill a way of avoiding full prosecution of the law. And then, because it's a Quebec company, the Liberal vote there is very important. So the Prime Minister's office attempted to force the Attorney General, which is your top legal officer, to going along with the flow. And she looked at the law and said no. And the pressures were on quite relentlessly until it finally broke as a full-fledged scandal. It really is a severe scandal. And, of course, the governing Liberals, you know, in Canada they've been called the natural governing party for 100 years. They're in deep trouble. It is bad business. But a month ago, in looking at the political changes in going on in other countries where there has been a popular uprising against intrusive government, in the U.S. definitely, France with their yellow vests, and Canada, you could say that the last election in the province of Ontario was put through, won by the uprising against big government. So this then, the trend is changing. So the view that I wrote was that it was possible that the Liberal Party could lose the general election in this coming October. And then, of course, when the full details of the scandal came out, that makes that probability a little more convincing. So on the initial conclusion that the Liberals could lose, this would be getting responsible and accountable government back in would be a plus for the Canadian dollar. Then also with industrial commodities likely to rally out to March, that was a plus for the Canadian dollar. So, but if the view was that the Liberals would remain in office, then you would have the bear market for the Canadian dollar continuing relative to the U.S. But this is now turning favorable for the Canadian dollar. Of course, maybe by mid-year, if industrial commodities is heading down, that would be a negative for the Canadian dollar. But as the prospects of political change occurring with the October election, that would be a plus for the dollar. So net, we're kind of positive on the Canadian dollar going into the election in October. But we should kind of compare things in the United States, where you had a travesty of justice as well there, with the Department of Justice and the FBI high-ups there deciding they didn't like Trump as president, and then have moved illegally to try and depose a sitting president. It's never happened before. But the system's beginning to work against that attempt. Now, in Canada, what this seems to be is that the Prime Minister's office was trying to do things illegally, and the high-up, Jody Wilson, whatever,
Raybould,
as the Attorney General, resisted and indeed fought the attempt at corruption. So it is fascinating stuff, and ultimately to have a cleansing of the swamp in Ottawa would be very constructive for Canada's democracy. It's very exciting, and of course I'm watching it as close as I can. But net, Jim, a plus for the Canadian dollar out to the actual election.
Now, I haven't heard the opposition say if they gain power, they would get rid of this controversial deferred prosecution agreement section of the criminal code. And it looks like it was only brought in to give SNC a break.
Oh, SNC was lobbying for that hugely. Now, what may happen is that it's a big and important engineering company globally, and the crimes, if you will, alleged that were done by some individuals at the top. So for the company, the best thing to do is they are out and effective management is in, which should not change things. It should be done in every instance like that. Of course, back in 2009, when with that contraction, General Motors was in deep doo-doo, and the thing then would have been to let it fail, and other successful car manufacturers would pick up the pieces and make it work. But then Obama had to say he rescued it, and they screwed the bondholders and transferred a huge amount of wealth to the unions. It was not properly done. But this thing, when some high-ups in a company, there's malfeasance, you get rid of them, and there's no reason why the company would disappear. So anyways, this is the problem with the understanding of the Prime Minister's office. They feel that they have to keep the top bad guys in and going, otherwise the company will disappear, which is not understanding how markets and businesses really work. So it's a tragedy all the way around, but except it helps assure that there will be a change of government in the October election.
We'll have more with Bob Hoye right after this.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. Work programs are underway in Finland and Canada. Arctic Star trades on the TSX Venture Exchange symbol ADD, on Frankfurt symbol 82A1, and the OTCQB symbol ASDZF. Please visit our website arcticstar.ca or call us at 604-689-1799.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Bob Hoye. Bob, PDAC, the Prospectors and Developers Association convention's happening in Toronto over the weekend. And there's been a saying in Canada that there's a curse surrounding it because junior gold miners tend to do well going into the conference, and then they don't do all that well after the conference. Anything to that curse, the PDAC curse?
Yeah, I remember when it was called the Prospectors, and going way back, it was less influential, but there has been a pattern in, or used to be a pattern in junior mining stocks, is that often the exploration bets were in the north. So at the end of the summer, no activity going on, no results, no news, so the stocks would decline. So you'd take your favorite, pick a list of, say, 5 juniors, exploration companies, that had good prospects, and you began to accumulate them in the middle of December, and with an idea to get your full position between Christmas and New Year's, because as the saying is, the promoters would all be away on holiday, and then looking for a rebound through the summer, and definitely to March. And March is often a good high for base metals. So, and then, in gold, the old saying, sell in May and go away. So, yes, there was a seasonality to Canadian gold exploration companies, and you did do your buying at Christmas, and then if you would have a good move by March, you'd lighten up on the stock. So, but now I think the idea of tying it to the PDAC, or as what we used to call it, the Prospectors, is on top of an already existing pattern. And there's an old story I can recount about, and it was a dreadful bear market, so bad that, a savvy trader was realizing it was so bad it could be bottoming. So he had the phone numbers of a number of companies that he thought might be decent prospects. So he phoned the phone number, and these are the days before you had answering services. And if somebody live answered the phone, even a secretary, he'd hang up and put it on his list to buy, that the company was still alive. So there's lots of old folklore stories in the market, and the opportunities here on the gold side are outstanding. And our work, of course, has been that when you're in a great financial bubble, the real price of gold, as deflated by the consumer price index, or the rate of inflation, heads down, which it did. And then as the bubble is concluding, it would try and base, which it has been doing. And then with the post-bubble contraction, gold's real price goes up, which restores profitability to the gold mining industry, and then you have a bull market for the gold stocks. And our entry was the 1st of November, and for a modest position, because these bottoming things are never too friendly. And also you would have problems in going into Christmas with the big stock market. But at any rate, at some point over the next year, you're going to get the next leg up in gold stocks. They're overbought now. The next leg up, and then we would be in a new bull market for gold stocks. It would be a number of years, and that would be within a many-year bull market for stocks. The only main interruptions would be on the business cycle and the big stock market going into bull and bear phases. So, but we've got the ability to position in the gold sector, and we also have the ability to take the trades on it, which with speculative stocks you have to be trained to do that. And but the main thing for me, Jim, and this old geophysicist, and I did spend some years in mining exploration work, is that I really like the exploration side, and we're looking forward to a great bull market in that sector, but as usual, it's going to be difficult of entry. But when it gets going, it'll be fantastic. Now, there's been some good moves with some of the juniors recently, which is great. It shows that the market is turning from that long bear market to, as we're saying, a potential new bull market.
Bob, thank you so much for being on the show, and we look forward to your appearance on This Week in Money this weekend.
And looking forward to it, Jim.
My guest has been market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. If you have any questions for Bob or any of our other guests, you can send them to info@howstreet.com. Find us on Twitter @HowStreet, our YouTube channel, Talk Digital Network. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.